Will we see other central banks cutting rates this week? The Reserve Bank of Australia, the Swiss National Bank, and the Bank of England all meet this week. What could that mean for their respective currencies? This is the week ahead here at XM.com. Thanks for joining us. I'm Cristina Marujos. With me today is our lead investment analyst, Raf Boyajian. Rafi, starting in Australia, it could be said that the inflation outlook across the country is becoming worrisome. Therefore, how could it affect the RBA policy decision on Tuesday?
Well, Christina, that is indeed exactly as you said it. The inflation picture isn't quite what the RBA had hoped it would be in 2024. In fact, we haven't seen any declines in the monthly CPI prints at all this year. And in addition to that, we are seeing some renewed strength in the labor market. So there is a concern that policy isn't tight enough in Australia. However, markets aren't pricing in another rate hike. We had seen some rate hike expectations. Those have now been priced out, but maybe that's being over optimistic. I don't think we can rule out a rate hike just yet because and even the RBA, they themselves, in fact, at the last meeting, the rate hike was discussed. But the thing is, I don't think they're going to take any decisions at the June meeting either. They will probably want to wait for maybe another inflation print, as well as some more clarity on the labor market. And should we see, for example, further resilience in the jobs market, as well as still no progress on the inflation front, then I think a rate hike is possible. So for now, although they probably will keep the cash rate unchanged on Tuesday, they might possibly tweak the statement to be a little bit more hawkish, and that could boost the Australian dollar. However, I don't think we're going to see any dramatic moves because investors will probably, investors will probably want to get more clarity on the rate outlook, not just in Australia, but also on the Fed. So we'll probably just potentially see a knee-jerk reaction.
Let's cross into Europe now. The Swiss National Bank delivered a surprise cut back in March. Could we see another 25 basis points cut delivered at Thursday's meeting?
Well, investors certainly see a strong probability of another rate cut. In fact, currently we have about 2/3 probability priced in of another 25 basis point cut. However, I think markets are overestimating the chances of a cut just yet, mainly because if you look at the data, there is no urgency to cut so soon after the last move. We've seen inflation tick up to 1.4%, which is above the midpoint of the SNB's 0 to 2% inflation target. We also saw an upside surprise in GDP growth in the first quarter. So the SNB might want to wait. And in fact, a more crucial factor here is the exchange rate, because the Swiss franc has been rather weak this year against both the dollar and the euro. And in fact, we even heard from SNB chairman Thomas Jordan, point to the weaker franc as a risk to inflation. So there is a sizable risk that markets have got it wrong, and the SNB will keep rates on hold. And should that turn out to be the case, that would probably boost the Swissy.
The Bank of England also meets on Thursday amid a general election campaign in the United Kingdom. Can we expect, though, any significant announcement, and how might that affect the pound?
Well, as you said, we're in the middle of a general election campaign. So the Bank of England, I think it would be controversial for them to flag any policy shifts. So we can be certain they're not going to make any policy decisions at this meeting. They might not even, make any tweaks to the policy statement, because if they do anything that would suggest that rate cut is on the way, that might be seen as trying to influence the election outcome. So the Bank of England probably has its hands tied at this meeting. They will probably want to wait till after the July 4 election to start signaling a possible cut, and we may well see a rate cut in August, even though markets aren't, seeing a rate cut in August. They see it actually the first coming in November. But inflation has fallen to 2.3%. In fact, we've got the next CPI report coming out on Wednesday, and that's expected to show inflation potentially falling further. In May, we may even see a drop below 2%, below the bank's target. But the question is, how much negative would this be for sterling? Because in fact, should the Bank of England surprise us with a rate cut in August, I think that might just be a case of bringing forward, some of the planned rate cuts. Because in the bigger picture, I think what's going to affect, how much the Bank of England will be able to ease policy is going to come down to whether or not we're going to see a substantial drop in wage growth and as well as services inflation, both of which remain quite elevated.
And Rafi, before I let you go, apart from these 3 central bank meetings, the upcoming week has a lot of data releases on the agenda. Anything in particular, though, investors should be on the lookout for?
Well, of course, we just had a fairly volatile week for the US dollar. It's been a rather exciting one. We had the soft CPI report followed by a hawkish Fed meeting. So markets are now more certain we're going to get a rate cut in September. So next week, I think the focus will mainly be on the retail sales numbers. So should we get, as forecast, a potential rebound in retail sales in May, we might see rate cut expectations being trimmed back a little bit, but overall, I think the main driver for the dollar in the coming week is should we get some interesting remarks from Fed officials. And then, of course, moving to the euro, which has also been rather volatile, we're going to get the flash PMIs at the end of the week, and this will play a role, I think, how soon the ECB will cut rates again, because we are seeing some stickiness in Eurozone inflation. And if we see some decent set of PMI numbers during the summer, that would basically weaken the case for another rate cut in the near term. And potentially that might provide the struggling euro, which just has been hit some political uncertainty. It might get a little bit of a boost. As for the yen, although we are expecting to see an uptick in Japanese CPI, the core CPI is expected to rise to 2.6% when we get those numbers next week. But whether or not it's going to do much for the struggling yen, it remains to be seen, because BOJ just announced that it's delayed its decision on how to taper its bond purchases until the July meeting. So I think the yen will probably need a little bit more convincing in order to stage a decent rebound.
Rafi, thanks so much. This was The Week Ahead here at xam.com.